All right, what's up, everyone? This is Kirk here again at Option Alpha. So welcome back to another episode. Today, we hopefully have a good one for you. We want to go through some step-by-step backtesting, how you can run your backtests and test out your strategies, test out your ideas before putting your hard-earned dollars at risk. So I'm going to show you how to set up a backtest inside of OA, and then I'm also going to show you how you can combine multiple backtests, run comparisons, etc. And ultimately, if you find a backtest or a series of backtests that you like, go ahead and quickly automate those strategies and start running them right away in your account. So we'll jump on over to the slides here, and we'll start here with this slide set here. What I want to do is I want to show you how the backtester kind of works inside of Option Alpha. This gives you a lot of context, hopefully, on how you can put it together for yourself. So inside of Option Alpha, when you go to the backtester, you can see you've got a bunch of different tabs up here on the top. You've got My Backtest, you've got your Save Backtest, which is brand new because we just released a new version, which has a lot of new goodies inside the backtester. So you can actually save backtests that you like and kind of put them into different folders and categories. And then you've got Top Backtests, which is actually kind of cool because it basically gives you data on some of the top backtests in the community. You got to kind of comb through this a little bit, do some logic checks around some of these, some rational checks, but it's a good place to start if you have any ideas. So first thing that I'm going to do is I'm going to show you how to run a brand new backtest from scratch. Let's say you have an idea, you want to run a new backtest. You're simply going to click on the new backtest, choose your symbol you want to test. Right now, we just have 0-day and next day expirations. We are currently loading longer expirations, 30, 45-day expirations, but it's a lot of data because we're loading minute level data. So we should have that out. And one of the future updates will have the ability to do longer duration. But right now, let's just say we want to do a 0 DT position. Let's say we want to do a short put spread. You can test any of the different strategies, of course, we support. And then we've got to select our legs. And here you can do a lot with the legs. One of the newest things that you can do is this one here, which is you can target your leg by the opening range. So opening range breakouts and a lot of that functionality, which is a popular strategy, was kind of introduced in this latest version that we released this weekend. So if you wanted to target it by opening range, you could do that. I'll show you an example of that here in a little bit with the Save Backtest. But let's just say right now we just want to do a regular standard delta. So we'll do our short put at about a 30 delta or closest. We'll do our long put. We'll say let's do that one about $5 below the short put leg. Exactly. So we wanted to do a $5 wide spread. Next, we're going to set our capital allocation. So this is how much starting capital you can start with. You can set this as 10,000, 5,000, 4,323, whatever you want. It doesn't matter. So you just set that amount there. You set your position sizing. This is where you can really test some pretty cool stuff. So I've got a video coming out maybe next week or the week after that kind of shows how you can do this, where you can test a lot of these different position sizing metrics inside of the backtester. Very easy just to test a contract at a time. You can do up to a certain amount of risk, a percentage of capital up to a certain amount of risk. And then you can do all sorts of progressive betting strategies around this where you double or increase risk or decrease risk or whatever the case is. This is a really cool, it gives some pretty unique insights on how you can kind of try to optimize as much as possible the amount of capital that you're doing. So in this case, we'll just do a contract to start. We'll make it super simple. Position entry time. This is the time of the day that you want to enter the position. You can do time of day, or like I said, you can do the new opening range breakout. Again, we'll go through that example here in a minute, but you can do time of day. Time of day just says when do you want to open this position, or generally when do you want to open it. Let's do 10:30 a.m. to start. We'll select all of the trading days. You can deselect some of these. We can skip FOMC days if we want to. And then we can include some slippage on the open, or we can include some slippage at the close. Typically, I like to include at least slippage at the close. You can include slippage on the open if you want to. It's totally up to you. Now you've got your position level criteria. You can filter by minimum price or risk reward or bid-ask spread. You can also do some entry filters around indicators. So RSI has to be above a certain level, or the opening VIX change has to be this level, or the gap overnight has to be this level, right? So you can do all sorts of things where you can say, hey, let's say the gap is, between 0 and 1%, kind of the market gap that it's moved. So this is really cool because, again, it can kind of stress test some of the things that you're doing. And then, of course, you can throw in there your exit options like profit taking, your profit targets, which would be just a specific dollar amount. Profit taking would be something like 10%, and then profit target would be $50. So whatever one of these gets hit first, you can require 2 consecutive hits there to make sure it's a valid price for testing. It's just more stringent, a little bit tougher on the testing, which is good. But if either one of these get hit first, then you're out of the position, right? So you can do stuff like that. So we'll just go ahead and clear these for now and just do none. And then, of course, you can include slippage on the exit. Again, I always like to include slippage on the exit. Seems like it's the most logical way to do it, just to, again, force you to stress test your strategies as much as possible. And then we can do as long of a period as possible for this, in this case, currently 3 years. So let's go ahead and run this back test. We'll just go ahead and view the results. While that back test is kind of loading up, let me show you what's going to happen if you wanted to compare multiple back tests. So you can do this all at the same time. So this back test is running. Again, sometimes depending on how crazy your backtest idea is, it may take a little bit of time to run. That's okay because it's testing it on 1 minute data. So it's not end of day data. It's literally going through option chains every single minute. But what you can do immediately is you can compare this against other types of positions. So if I wanted to compare, I could start a comparison process right now and just spin up a ton of backtests to look at. So that's what I'm going to do. I go into the compare mode here, and then I click the 3 little dots on the right side of this backtest, and I can go down here to add variation. And when I go to add a variation here, what that's going to do is it's going to load up the exact same backtest that I have so that I can tweak 1 or 2 different things inside of here. So if I want to test something different, what I typically do is I don't do like a wildly different strategy, right? Maybe conceptually the same strategy. Maybe I test some different entry times or different indicators, but I try to keep my testing, close enough that I'm testing a variable that I can kind of isolate. Like, do I isolate time? Do I isolate profit targets or an indicator, right? So I want to test like wildly different. That you can if you want to, but I don't prefer to do that. So something I might do would be, okay, I'm going to test, let's say the 30 delta. And actually, you know what, let's do, instead of the delta, let's just do different times of day. So let's do 12 o'clock p.m. versus 10:30 in the morning. Okay, so we'll do that back test. Then we'll spin up another variation here, and we'll do this one. We'll still do this one at 12 o'clock, but let's do this one. Let's do one more variation. Let's say that we're taking profits at 50%. Definitely always check the box, I think, for requiring 2 consecutive hits. Just it's a little bit more strict on the back testing, and make sure that it's not just a random price quote that you got during the day, but that quote was hit multiple times, right? So we're going to go ahead and run that back test. We'll do another one. So we'll add another variation here. This time we'll do, let's do a little bit lower profit target, maybe something like 30%. Maybe that works. So we'll run that one. I mean, you can keep going in here too. Let's do one more profit target one just to kind of, again, show you how you can compare these side by side. Let's do a much higher profit target, say something like 60%. Okay, so now you've got all these back tests running in here. So all these back tests, again, are testing different things. And you can, again, just leave these alone and let them run. You can pop open a new window, run some new back tests if you want to, get some different examples. Let's let these run, and we'll come back to them here in a second. But let's take a look at this one. So this one right here is a new back test, or a back test that I've ran before. This one's a good one just to look at kind of what it looks like for results. I don't know why the screen went so big there. There we go. So this is one that I've run before. It's a 230 entry. I've done videos on this, but this is what your P&L curve looks like here. Obviously, you can tackle and show the underlying price in here, which I find kind of interesting and very cool. So if you were just to take the same amount of capital and kind of invest it into the underlying, then this is what you would ultimately have for this strategy. And so it can show you if your strategy, what I like about it is it shows you if your strategy, A, is outperforming just the underlying, which is important. But then B, is your strategy also less volatile? Is it a better P&L curve? Do you have more volatility, less volatility? So you can kind of see in this strategy that I'm running right now that it generally has less volatility than the broad market, which it should have it because this is an iron condor, so it's designed to have a little bit less volatility. But it also, kind of shows that P&L curve is pretty steady as long as we give it enough time, right? If you also go down into the results, you can dig it down into not only all the stats, right? The win rate, your worst win, your worst loss, or your best win, your worst loss, how many wins you had in a row, how many losses you had in a row, your average entries. So your average premium was about 223. You're risking about 227, but you're winning 58% of the time. So your average P&L across the board was about $18 per trade that you did. What's also cool is you can dig into the actual trades. You can see every single trade that this thing would have made, and you can just kind of research it yourself and go back through it and kind of verify and look at all the different prices and times, etc. This thing was run to expiration every single time. So just enter position, let it dump, let it run to expiration. Don't get out of the position ever. I like this because it gives us, an idea. I call it like a base case scenario, like an expiration scenario of, okay, if I don't do anything else, I just run it to expiration, what would it do? And I usually like to start with that kind of methodology and try to go from there. The other thing that you can do here is you can see your monthly P&L numbers. So this is pretty fun when you go into it, because I think not only does it give you an idea of just how frequently it's entering positions, especially if you have a lot of indicators and a lot of criteria and filters. Sometimes you'll get a back test that looks really good, but you might see in the P&L, the monthly P&L numbers, that most of those trades were entered in a certain period of time, and it really hasn't entered a trade for a while. So again, this can give you an idea of like how consistently is this thing entering positions. This one is pretty consistent because it doesn't have a lot of entry criteria. Its main trigger is just, is it 2:30 in the afternoon, and some very, limited criteria filter for that. But it's just religiously entering positions based on, the months and available trading days. So that's kind of good. And it also shows you kind of what you might expect for P&L. That shows that, sometimes you might go through a little bit of a drawdown. It might be a couple months you're in a drawdown. You might have some good months in a row. You might kind of, bounce back and forth. If you started this in the beginning of the year in February, you did 19 trades and you had $100 to show for it, it probably didn't feel like it was a great strategy at that point because you really weren't doing much. If you started the strategy in May certainly didn't feel like a good one because it was one of its down months. So that didn't feel like a good one. But again, it gives you some context overall into, kind of how these strategies are performing. All right, so let's jump back over to this tab here, which is the results of all of our tests that have kind of finished up. This is pretty fun. I like doing them like this all the time because when you do it like this, it's pretty clear if what you're doing is making an impact or not. And I just totally guessed on, pulling together some of these ideas and strategies. But you can see here that the first test that we ran, which is test number A was terrible. It was just a dog strategy. It didn't really work. So entering a short put spread at 10:30 in the morning, nothing else, no other filters, really didn't help yourself at all. It made negative $282. At one point, it was up $3,800, but its max drawdown was super high. The profit factor was $1. I always think of this as like, if you put $1 in, how much are you supposed to get out? And in this case, you put $1 in, you get $1 back. You're just kind of turning your wheels. The crazy thing about some of these tests, I think personally, is when you start getting into these metrics where you're really looking at a strategy and saying, okay, this strategy did not make money, but it was a 75% winner. This, I think, is one of those things that can trick you. Like if you are trading options and you see that a strategy, if I just like walked up to you on the street and said, hey, I've got this strategy and it's a 75% winner, like 75% of the time it wins. Probably most people, without asking any other questions, would be like, sounds good, sign me up, like let's do it. But that strategy is 75% winner. It just never covered the wins. Like when it lost 25% of the time, right? And it got into max loss territory, those max losses were significantly higher than all of the times that it covered than you had your wins. So this is really helpful, I think, because we try to give you as much stats as possible just to show you that it's not just win rate that matters. It's the overall P&L, your average P&L, your profit factors, right? Like, is it at its core a good strategy? And so in this case, when you kind of look at these, you look at these and go, okay, this one won 75% of the time, but the average P&L in this trade was net, basically zero. And so it really didn't help out. You made some money, but when you lost pretty much all the money that you made. And you can visually see this in the chart too. Like look at the blue line here. It just kind of seesawed all around. All right, so let's look at the other ones too. So the other ones were all testing 12 o'clock entries and then also variations of the 12 o'clock entries. So I'm actually going to just remove this test right here. So I'm just going to go ahead and remove test B. That's going to shift up the new blue line. Don't get colorblind on all this stuff and like get weirded out. The new one, the new baseline test here is test number A. Test number A was just entering positions at 12 o'clock instead of entering positions at 10:30 in the morning. And then all these other variations were variations of entering positions with profit targets. Now, by the way, you can, if you get confused, like sometimes I get confused and I say, okay, this is a 50% profit. I believe this one was 30% profit. We can double check here. So you can just actually rewrite these descriptions. We'll just open that one up. Yeah, 30% profit taking. I think the other one was 60%. And yep, that one was 60% too. So we'll just go ahead and make this one 60% profit. And again, you can make these descriptions as crazy as you want. Normal left to expiration. So this one didn't have a profit target. It was just enter it at 12:30 and leave the position on to expiration. So again, I'm showing you how I do it. I kind of organize it like this. I put some of these things in here, but this can help show you how things kind of move around. You can reorganize these too, so you can see, the progression of profit targets. In this case, let's just look at A as a baseline here. So A, this test right here, which was running this at 12 o'clock versus running it at 10:30, dramatically improved your performance. Now, I don't know if this was a strategy that I would, say, hey, this strategy by itself is one that you just run, right? Because it's still pretty volatile. And for the most part, the last couple of years has gone pretty much sideways. It hasn't really made significant ground. So it did make money. That's great. The metrics are not amazing on it, but they're not terrible either. It's not a loser, but it's just not probably the best one. But let's use it for our purposes here. So it did make money, test number A, entering at 12. You can see the profit factor was over 0. That to me is a win. Like it definitely, that's one of those things that I think I look for sure is like profit factor has to be over $1 because if I put $1 in, I want to get more than $1 out ultimately. Win rate was high, great. It doesn't need to be high. I've got strategies that I run that are low win rate, but should have high profit factors and high average profits on trades. So high win rate it's not a requirement. It certainly helps, makes you feel better. You go 16 wins in a row, you probably feel like a trading rock star, but it doesn't also mean that you're going to win overall in the strategy like we showed you, right? And then we go down here and you can see the average P&L was about $6 on a trade. You're risking about $3.90. Again, these trades are just run to expiration, so you're only holding it for about 4 hours during the day. So overall, I mean, you made money on the position, on the strategy. It could be a winning strategy. So it was logical that then you would try to do some additional testing like 30% profit, 50%, 60%, et cetera. However, you can see that 30%, 50%, 60% profits were significantly worse for this particular strategy. Now, the trick is realizing that not all profit targets are the same for every strategy. This does not mean that because profit targets in this case didn't work and were detrimental to the strategy, harm the strategy overall, that doesn't mean that you're going to go out and be like, profit targets are done. Kirk said profit targets are terrible. No, you still need to test them on different types of strategies that you're running or different setups that you're running just to see if you can help optimize it. I've seen cases where profit targets, of course, do help, where taking profits early makes sense. In this case, it didn't make sense. All the way across the board, anytime you introduce a profit target, you basically cut down your total P&L, you cut down your profit factor to something at or below 0. You did increase your win rate. That's always the goal of taking a profit early is you're increasing your win rate, but you gave up more to do that than you got in the win rate being increased. And you basically turn the strategy around from a profitable strategy to a not profitable strategy. So you had all of your P&Ls start to go negative or back to 0, which really didn't help out. So I think that it's kind of, a really good one here where it's kind of like case closed, like the book is closed on this one where it didn't really work. You didn't really get anything in value from this by taking profits early. Okay, let's go over here and let's go back to our saved backtest. I want to show you a different one. This is using the opening range breakout. Jack had shared this in the community with our new release post this weekend. But what I like about this is that it shows you a couple different things. Okay, you might have snuck a peek in there at that really quickly. But what you can do inside of the new back testers, of course, not only just test the opening range breakout, which let me show you how this one kind of works. This is entering a short put option, and you're targeting your short put strike a penny below the 60-minute opening range low or lower. So if you want to think about the opening range is like, we're going to track the opening range for the day, and whatever that 60-minute opening range is, enter a position that's just below where the market was trading in that 60-minute kind of first hour of the market. That's pretty cool that we can kind of target that type of setup. And then, of course, you piggyback your long put leg off of that short put leg that you have. And then as far as entry time, of course, you're not going to just pick an entry time that's, kind of any time during the day. No, you're going to target it off of the opening range. So in this case, you're going to target it off of the opening range and the 60-minute opening range, and only if it has a breakout above the high. So we're going to enter on the lower end of the opening range, but we're going to wait for that breakout above the 60-minute opening range high, which that could happen after the first hour, could happen after 2 hours, 2.5 hours. In this case, we set the latest entry as 12 o'clock in the afternoon. So after that, if we get a breakout of the opening range late in the day, we're not going to do anything. Range width is a pretty good one. It means that you got to have the range. The width of the range has to be more than that amount. So it can't be so tiny. We want some movement. So you kind of have a low level filter there. Of course, we're only going to trade the first breakout. We'll skip FOMC days. And in this case, I don't think he introduced any exit options, any additional entry filters. So those are things that we can kind of test here. The other thing that he did here is he also tested a short call spread, which is basically doing the exact same thing, just the opposite direction. So it would be all the same stuff, except we're doing the short call spread position, which is right above that opening range, 60-minute opening range, if we get a breakout below the 60-minute opening range on the day. So basically, you can think about these two strategies right here as waiting for the market to get into or break out of its opening range. And then wherever it breaks out of, we're entering a position behind that, the opposite direction, kind of going like, look, if the market's breaking out bullish, let's add a bullish position. If the market's breaking out bearish and starting to move lower, let's add a bearish position. Let's do that, right? So at any point, it's going to try to add one or two, one of these strategies. And so independently by themselves, and I think this is kind of cool, like when you start to figure some of these things out, you can look at these and say, okay, independently by themselves, these strategies really did well. So again, these are just looking at them independently, like either running the short put spread or the short call spread independently did really well. Profit factors were really good in both cases. Your total P&L was really good. You had really high win rates. I mean, like you probably could look at this win rate and go, and this is how I kind of think about it. I say, okay, maybe there's an opportunity here to test something slightly more aggressive because we can give up our win rate if maybe we can collect some additional premium, right? Like maybe there's an opportunity to test that. You can't get any higher than 100% win rate. So when you're at 90, you're pretty good. You're feeling pretty good on this. Maybe there's an opportunity to kind of shorten up that spread width or maybe test something a little bit closer. So it's pretty interesting. When you go down to your averages, $36 average P&L, those are pretty good. Again, these are significantly better strategies than the random one that I threw out there that you can test. But this is the whole point to me is like, just if you have an idea, test it, see what's going to work. And if it's just a, random strategy that works, great. If it's a random one that doesn't, great. Then you can test new ideas. Then you can start moving into a different paradigm. When you can take these now is you can actually combine these into basically combined test results. And this is what I think is kind of cool. So if you decide you're like, hey, look, I like both of these strategies. I actually kind of want to combine the results and see what they do. So I'm only going to open one position at a day, one position at a time. I just, kind of want to see if there's, anything that happens where it's like a breakout. I just want to kind of combine the results of these because they're only going to open one position either way. So I already know that. I don't need to do any extra rules on it. But if you run both of these strategies concurrently, one waiting for a bullish breakout, one waiting for a bearish breakout, then you get these results. And again, these are kind of the summated or summarized P&L results and stats, obviously. So you got into a lot more positions. You still had a pretty good win rate. you still made a ton of money on this strategy, super good profit factor, average, P&L was pretty good, right? Obviously the individual positions were here, so you can see those. We don't have to rehash those and show those. So it's a pretty cool strategy to kind of combine these results of these strategies. And again, I like doing this because if you just take these and say, look, I want to put these together, or different types of positions like this, you can get some pretty cool stats and some pretty cool layouts. So one other thing is if you go here and you just want to look at the individual one, so where you would actually see show the underlying price is only on an individual setup like this. So here you would see that this one, if we show the underlying price, it kind of followed and tracked the market a little bit, didn't do as well in the recent volatility, which kind of expected if it's chopping around. But you can see kind of that performance there from the strategy. All right, so let's go back here to this tab. Now, the coolest thing you can do, of course, is once you're done with all of this, you can take these strategies that you want to run and turn them immediately into bots. So if you've already backtested it, or you've taken a backtest that somebody else has shared, you like it, you can go over here to these 3 dots and you can create a bot for that particular backtest. You can say, this is my bullish opening range breakout ORB bot, right? And then you can connect it to your Tradier account, give it some capital, do whatever you want. Here's your entry criteria. This is what it will be scanning for. Here's your trade pricing. You can add some additional notes. We automatically throw in here a link to the backtest. So you always know basically when you're running that bot, hey, what was that backtest I ran? We always throw it in here. It was generated from that backtest. And then go ahead and create the bot. Now, inside of the bot itself, all of the settings will be inside of your scanner automation here. And all of those settings will show you exactly the same things, or do those same things that you had already tested. So can the bot open a new position? Sure. What are the market conditions and criteria? Well, these are the market conditions and criteria that need to be true in order for me to open a position. Notice it's got everything set up in the right place, in the right sequence for you based on the backtest that you already ran. And then if you go here to open position, again, these short legs are going to be determined based upon the 60-minute opening range like we had tested. So all of that information is right there for you, so you can run that bot immediately in your account. Now, if you go back to this tab here, and let's say you like both of these positions, then what you can do is you can take the combined results and create a bot from the combined results. So that you can say something like full opening range breakout strategy bot, right? And this would take both of those backtests. This is the newest thing that you can do here inside of the new release that we put in here, is you can do the full opening range breakout. You can run it inside of your brokerage account. And basically you have test A, which is going to do these criteria, double check how you want trade pricing to go through. And then you've got test B, which is going to do this trade criteria. Again, double check how you want trade pricing to go through to your broker. And then you create the bot. You go over to bot settings. Now you have both scanner automations that are set up, basically one for test A, one for test B. Those are both here. And again, those have all the criteria in them for that exact bot, that specific set of criteria that you wanted to run, which is super cool because now you can take combined backtests, throw them into one bot. You don't have to create multiple bots for every test that you're running, especially if you like the fact that it was created from the combined backtest. Then you can always reference that data right here. So it makes it super easy just to, again, focus more of your time and attention and energy doing what you do best, which is the analysis, the running strategies, the running different ideas, testing ideas, stress testing philosophies, right? Take those and spend all of your time there. And then once you find something that's really good, then automatically convert that into a bot and let the bot take care of executing the strategy so you can get back to doing what you do best, which is actually management of your bots, right? Management of your strategy, choosing new strategies to add to your portfolio. So I hope you guys enjoyed this one today, going through not only how you can run a backtest, kind of step-by-step process that you can go through for running a backtest, but also, again, how you can automate that strategy by just converting any backtest that you run into a bot. So as always, if you have any questions, let me know. Until next time, happy trading.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.